Good evening, everybody, and welcome. Columbus Day was no holiday for stock investors. They sold off again and hard again. The usual stew of recent worries gets the blame: slowing global growth, ISIS, Ebola, and now corporate earnings. They start flooding out in earnest beginning tomorrow. Today's sell-off accelerated in the final hour with no discernible trigger. But as the major averages broke through some technical levels, investors pushed the indexes even lower. At the close, the Dow had tumbled another 223 points, most of the slide coming in the last 45 minutes. The Nasdaq down 62, the S&P 500 down by 31. Blue chip Dow stocks now at a 6-month low, Nasdaq and the S&P 500 at 5-month lows. Now, besides earnings season kicking into high gear, what else is causing all that turmoil in the markets? Bob Pisani takes a look at 3 things investors are watching closely this week.
We are entering the heart of earnings season. About 75% of the companies in the S&P 500 will be reporting between now and the end of October. Several banks report this week. For big nationwide banks like Bank of America and Citigroup, traders will be looking to see if trading volumes for bonds and stocks have bounced back. But for the average bank, the key to this quarter is loan growth. There's been some concerns that loan growth is slowing down, particularly in commercial and industrial loans, that drove a lot of the positive comments from bank management last quarter. Now, one disappointment for banks is that interest rates still are not moving up. Higher rates would help banks because they'd be able to charge more for their loans, but that isn't happening yet. The second event to watch is signs of more weakness or stability in Europe, where the economic data has been poor recently. We'll get industrial production numbers in the Eurozone tomorrow. The good news is that if Europe continues to get weaker, there's little doubt the European Central Bank will step in with an aggressive stimulus program. Finally, and this is the biggest wild card of all, further outbreaks of Ebola could affect trading. The Center for Disease Control has said they are concerned about other infections potentially in the coming days, especially following the infection of a healthcare worker who treated the man who died from Ebola in Dallas. Even though there are only 2 diagnosed cases in the U.S., there's a very high sensitivity to this. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.